So how big is the global market? It's like $400 trillion. Well, what if Bitcoin gets 1% of that market? Well, then it's $1 million, $2 million, $3 million. I've always said that Bitcoin has no top because fiat money has no bottom. I think a couple of things we're going to see happening. Number one, people will no longer accept fiat money for Bitcoin. So you're going to try to buy Bitcoin with your fiat money and no one will take your fiat money. No one will take dollars at all. So that will be a moment of panic. They'll be like, oh, what? It's like, no. Here's $1 million. Here's $10 million. I want one Bitcoin. Like, no way, amigo. We don't want that shit. It's worthless.
Popular American broadcaster, filmmaker, and host of the Keiser Report, Max Keiser, is a Bitcoin OG, one of the few privileged investors who bought Bitcoin in its early days. Max started accumulating in 2011 when Bitcoin was trading for around $1 per coin. Max worked as a part-time stockbroker in the 1980s, an experience he says helped him instantly recognize the immense opportunity Bitcoin presents. Max recently sat for an interview with Blockware in El Salvador, where he and his wife, Stacey Herbert, are helping President Nayib Bukele achieve his aims for the Central American country through Bitcoin. During the discussion, Max makes a massive $10 million prediction for Bitcoin, stating that this would be the outcome of the great fiat Ponzi scheme. The renowned Bitcoin maxi foresees a time when, as a result of unchecked government spending and excessive money printing, the dollar, and by extension, every other fiat currency backed by nothing, will be worthless. Max says when that time comes, the world will turn to Bitcoin because it is the world's hardest money and the only reasonable alternative to the current monetary system. During the interview, Max also discusses the impact of Bitcoin ETFs and the incursion of big Wall Street players like BlackRock and its controversial CEO, Larry Fink, into the cryptocurrency space. Max has been quite vocal about his opposition to spot Bitcoin ETFs. Though he admits they have a few advantages for Bitcoin, he believes the risks outweigh the advantages, especially for investors. As we bring you clips from Max Keiser's interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
First of all, look at Bitcoin in other currencies other than the US dollar. So in Argentina and these other countries, it's screaming to new all-time highs and making almost vertical up moves. And more than half the world's population lives in countries where the currency is collapsing already. The US dollar is the cleanest shirt in the laundry. You know, it's the leper with the most fingers. I used to say more often until people told me that that was no longer politically correct to say that. Nevertheless, against all these other currencies, Bitcoin is already screaming to new highs. Against all fiat money, the use case for Bitcoin is, and I mean, this could get into the broader argument of getting back to the history of Bitcoin, and this is the epoch, because remember during the earlier epochs, there was this idea that Bitcoin needed to handle more transactions and needed to be faster. It's a medium of exchange, and this is what Satoshi wanted. And then that's an interesting sidebar that I have a lot to say about as well. But so against all these fiat money, it's already increasing its purchasing power against all this fiat money quite aggressively. And so anybody who would want to protect their purchasing power of having an asset that is going to allow them to go into the future with their purchasing power intact and even enhanced, there's no better answer than Bitcoin. Nothing comes close to Bitcoin to maintaining purchasing power and increasing purchasing power into the future. Nothing comes close. I mean, gold is kind of the nearest cousin to Bitcoin in the physical world, and it will continue to outperform gold very dramatically. It's outperforming property. I think part of the reason the property market is collapsing is because people are moving money into Bitcoin. The ETF market and the attraction of Wall Street obviously is adding another huge pool of capital into Bitcoin. It is decentralized. People say, well, the ETFs make Bitcoin less decentralized. That's completely false. We can get into that, but that has nothing to do with the centralization or decentralization of Bitcoin, because the decentralization aspect of the protocol speaks to the underlying consensus mechanism that that's proof of work and not proof of stake. So it doesn't matter if Larry Fink has 300,000 Bitcoin. He cannot change the protocol. He has no influence over the protocol, no more influence over the protocol than this person with 5 Satoshis. So there's an incredible democratic appeal right there. It's a meritocratic appeal. So and the decentralization of Bitcoin keeps getting more decentralized because you get more nodes. I mean, I will say this about the ETFs. It is an attempting honeypot. If the state wanted to confiscate Bitcoin, they would go after Coinbase, that's the custodian for all these ETFs, and they would potentially commandeer or seize Bitcoin, as they've done in the past with gold. I mean, I think that's a legitimate risk. I think people who are not self-custodying their Bitcoin are taking an unnecessary risk with their Bitcoin. But nevertheless, I would say that's a risk. But in terms of the overall decentralization of the protocol, it has no impact because it's proof of work, not proof of stake. So the people who are successful money managers are always reducing risk to get that rate of return. And so institutionally, they have tools for them to eliminate their risk. So Larry Fink has a lot of Bitcoin in his ETF. He also has a lot of hedges on to protect himself on any downside. And those hedges for him are relatively cheap to being free, whereas the retail investor can't afford those types of hedges. And they can't manage those types of hedges. So they're just taking that risk face right in their face. And so it's an asymmetric relationship between Larry Fink and everybody else, number one. Number two, as you point out, rightfully so, it's a proxy. It's not actual Bitcoin. So if you think you're buying Bitcoin when you buy an ETF, you are not. When you think you're having Bitcoin on an exchange, it's risky. There's only one way forward, and that would be self-custody.
Despite these numerous advantages, which more than anything show Max's deep distrust for Wall Street, he also recognizes the advantages of the spot Bitcoin ETFs. According to the Bitcoin OG maximalist, one of those advantages is that the ETFs have shone a spotlight on Bitcoin's ability to demonetize fiat currencies and gold. Shortly after the ETFs were launched in January, so much money exited gold ETFs that popular gold bugs like Peter Schiff had weeks of complete meltdown on Twitter. The success of the spot Bitcoin ETFs has also increased people's confidence and conviction in Bitcoin and the bull market. Since the launch in January, we've seen Bitcoin prices go from just a little over $40,000 to an all-time high of over $73,000 per coin. According to Max, this is not just the Wall Street effect on Bitcoin, but also the impact of Bitcoin on Wall Street. Bitcoin has touched Wall Street, and investors know they have to get aboard if they don't want to miss the huge opportunity that has been presented. As people like Bloomberg's Eric Balchunas have posited, these new crops of investors know they have to be a part of this, not because they are 100% convinced of price gains, but because they don't want to miss it, even if there is only a 1% chance that prices blow through the roof. Let's get back to Max's interview as he speaks further about Bitcoin, the US dollar, and the impending collapse of the global financial system.
I've always said that Bitcoin has no top because fiat money has no bottom, right? There's no backing for fiat money. It's just paper. And I think a couple of things we're going to see happening. Number one, people will no longer accept fiat money for Bitcoin. So you're going to try to buy Bitcoin with your fiat money, and no one will take your fiat money. No one will take dollars at all. So that will be a moment of panic. They'll be like, oh, what? It's like, no. Here's $1 million. Here's $10 million. I want one Bitcoin. Like, no way, amigo. We don't want that shit. It's worthless, right? So that's going to be panic. Then people are going to have to trade in other stuff for Bitcoin, like gold, their house, right? And then people are going to be panicked. And they should be panicked because the world we live in now is a fake world that's been created with the hologram of fiat money. And in that hologram of fiat money, many weird things are going on. Traditional values that held society together for thousands of years are being tossed out the window. Basic idea that like a moral value or an ethical value, like mathematical certainty, 2 + 2 = 4. These types of things are being challenged, like in the Cultural Revolution of Mao or during the totalitarianism of Stalin. It's so 1984 Brave New World-esque and it's like the people who, again, proof of stake or fiat money breeds a kakistocracy. That would be the rule of the worst amongst us. And because they can print more money to pass new laws to make it easier for them to print more money. So it just becomes a collectivist, socialist, communist, fascist, totalitarian nightmare. All those things are all basically the same. Yeah. And it's centralization, it's hyper-centralization. It's happening now. And unlike at any period in history before, though, there's going to be a cohort of folks who own Bitcoin. And those people are going to move to El Salvador, where Bitcoin is legal tender. So there'll be a mad rush, like those images of people panic leaving Saigon at the end of the Vietnam War and trying to scramble on the last helicopter. That's going to be at JFK, people trying to scramble onto the last flight to San Salvador to escape the hell of the fiat money apocalypse. The risk of buying Bitcoin today is less than it's ever been. So it's less risky to buy Bitcoin at 65, 70,000 than it was to buy it at $5. You're taking less risk because the market is more established, it's deeper, there's more players, and the use case and everything is more developed. So the risk-reward ratio has never been better. So you're making a risk-off investment. It's not a risk-on investment. It's a risk-off investment. And number two is that you have no choice because the fiat money world and everything that's not Bitcoin is going to zero against Bitcoin. So if you're not in Bitcoin, whatever it is you're in is going to zero against Bitcoin. If you buy Bitcoin today, in 5 years' time, your purchasing power against everything else, fiat money, gold, property, will be considerably better. So just look 5 years down the road. And do you want your purchasing power to be mathematically guaranteed to be higher? Or do you want your purchasing power to mathematically be lower, as it would be the case with fiat money and anything else that's not Bitcoin?
On Friday, the Japanese yen fell to its weakest level against the US dollar since 1990, a situation many Bitcoiners have warned will gradually spread through all other major currencies, including the US dollar, in the coming years. The yen has already lost almost 11% of its value versus the USD in 2024, making it the worst performer among the G10 currencies. The yen's depreciation is further worsened by the significant gap between the interest rates in the US, which are at their highest point in decades, and those in Japan, where borrowing costs remain stubbornly low, near zero. Investors are looking to the Bank of Japan to intervene. However, experts warn that with a debt-to-GDP ratio of over 260%, all interventions will only stall the inevitable crisis. According to data from Wikipedia, the Japanese public debt was estimated at approximately $9.2 trillion as of March 2023, or 263% of GDP, the highest of any developed nation. The US is already about halfway to this point, and it is only a matter of time before the same is being said of our national debt and the dollar. What are your thoughts on Max Keiser's interview and his $10 million prediction for Bitcoin? Please drop your replies, comments, and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.